Everybody, it's Ms. Morgan, and I'm going to tell you how to calculate vertical analysis. You'll see here that for the income statement, each line item will be stated as a percent of net income. For the balance sheet, each line item is going to be a percent of total assets. I'm going to make this a little bit bigger here for you to see, okay? So, revenues as a percent of net income. Now you can see here that it's more than twice the size of net income. So let's see what kind of percentage comes up. And the answer is going to be percentage. So I'm going to make sure and click that there. Okay. So I'll take 100,000 and divide it by net income. And that's 250%. Next, selling expense is 10,000. I'll say equals 10,000 divided by 40,000. Enter. Now, I'll say equals 20,000 divided by 40,000. Enter. 30,000 divided by 40,000. And then I'm going to say 40,000 divided by 40,000, because net income stated as a percent of net income is itself, so it's going to be 100%. So you can check your work there to make sure that everything is stated as a percent of net income for your income statement. Now for the balance sheet, think about the answer to the balance sheet. Well, the answer to the balance sheet is assets have to equal total liabilities plus the owner's equity. And so here you could consider total assets to be a percent, kind of to be the answer of your balance sheet. And we're going to make every line item here a percent of total assets. Let me highlight that. So here, my formula is 20,000 divided by 60,000, enter, 5,000 divided by 60,000, enter. Okay, so I think you get the point, but each individual item is going to be divided by the answer to that particular financial statement. Okay, so we have equipment, 18,000 divided by 60,000. I'll talk and mess it up though. Okay, equals 14,000 divided by 60,000. And last but not least, we have equals total assets divided by the total assets value, and that should be 100%. And that is vertical analysis. Now, what that does is that you can see that our cash represents 33% of our total assets. So after year after year after year, we can look at that and see how much cash we're keeping as compared to all our assets in total. And also we can look at certain expenses to see have those gone up over time in comparison with net income. So it's just another way to help evaluate the income statement and the balance sheet. Investors are going to look at this, but also management. Management is going to look at this to see how we're doing. Let me know if this helps. Thanks.